सही करे, मैं तो कह रहा हूँ डन कर लेते हैं।
बढ़िया करे यार।
पार्टी करेंगे, पार्टी।
हेलो बेटा, तुम लोग यहाँ शिफ्ट हो रहे हो?
मोस्टली आंटी।
सही है। मेरे हस्बैंड है ना, तो इनके कुछ दवाइयाँ चाहिए, वो आप ले आओ। प्रेस्क्रिप्शन। हाँ। कितनी अच्छी बात है, तुम जैसे यंगस्टर्स इस बिल्डिंग में आ रहे हैं। पैसे तो लो। अच्छा, मैं क्या कह रही थी, जब आप मार्केट जा ही रहे हो तो मुरारी की दुकान से एक डबल रोटी और थोड़े अमरूद ले आना, बहुत अमरूद खाते हैं।
अच्छा अमरूद।
अच्छा सुनो, बच्चे जा रहे हैं, तुम्हें कुछ चाहिए? यही लेके आना बेटा।
आंटी जी एक मिनट। पार्टी नहीं, ड्यूटी लगेगी। Housing.com।
Housing.com with maximum owner properties. Housing.com पर से perfect. Download now.
आते हैं आंटी लेके, हाँ सामान आपका।
दूध ले आते हैं हम।
ठीक है, चलो फुटले।
Hello everyone, Namaskar, Salaam, Sat Sri Akal, Vanakkam. We are back with a fresh episode of Keeping It Real by Housing.com. This is India's first real estate focused podcast. It brings to you updates, views and insights about the realty sector, an explainer on a chosen subject and a deep dive into an industry trend or topic. You can catch the episode on Housing.com, on the Housing.com app, or on earshot.in, Spotify.com, Apple Podcasts, Google Podcasts, Ghana.com, and JioSavan. If you missed the episode, don't worry, we have you covered. Wear your headphones or put on the phone speaker. You can listen to this while driving, eating, cooking, jogging, running, walking, chopping vegetables, or basically doing anything else, whenever you want, wherever you are. Actor, influencer, entrepreneur Kuldeep Singhania tells us about the experience of buying his first house. Land or apartment, which is a better investment bet? Punjab Government reduces NOC issue time for property sale purchase. Know how to save capital gains tax on the sale of residential property. Details of all these and much more are in this episode. Your first house is always special. The feeling, the experience, the excitement, the emotions, everything is just so overwhelming and distinctive. This is true for everyone. Beginning this episode, we bring to you a new segment, Mera Pehla Ghar, where we ask people about their experiences of their first house. In this episode, we spoke to actor, influencer and entrepreneur Kuldeep Singhania, who shares his Mera Pehla Ghar story with us. Let's listen in.
पहला घर एक्चुअली जितना ये सुनने में फैसिनेटिंग लगता है या फिर इट गिव्स गूज बम्स टू एवरीबॉडी कि यार मैं मेरा पहला घर कब खरीदूंगा या कब अपने पेरेंट्स को पहला घर गिफ्ट कर पाऊंगा। आई मीन मेरे लिए भी ऐसा ही था। फ्रॉम माई चाइल्डहुड डेज आई ऑलवेज वांटेड टू मेक माई पेरेंट्स हैप्पी एंड टू मेक माई सेल्फ प्राउड। And very recently, we kind of shifted into our own, very own 5 BHK duplex studio, which had a private home theater and which had my studio, my editing room. I'm not telling this because I actually want to, kind of show off कि देखो मैंने अपना पहला घर बना लिया या खरीद लिया, whatever it is. The main thing is एक जैसे कहते हैं ना एक ड्रीम पेरेंट्स का कि यार हमारा भी एक अच्छा सा बड़ा सा एक थोड़ा लग्जरी वाला घर होगा। एंड फाइनली जब ये पूरा हुआ अभी रिसेंटली दिवाली पे ही वी हैव शिफ्टेड, सो दैट मोमेंट वाज very very special for all of us. We literally had tears in our eyes when we were shifting. So yes, I mean just keep on working, keep on following your dreams, keep on following your passion. And जैसे कि God has blessed us with our very beautiful duplex property. I wish and I hope आप लोगों का भी जो भी एक ड्रीम है अपने घर में शिफ्ट होने का, अपने स्टूडियो में शिफ्ट होने का, अपना खुद का अपार्टमेंट लेने का, आई विश वो सारा जो भी ड्रीम है वो बहुत जल्दी पूरा हो। बट जस्ट कीप ऑन गोइंग, नेवर स्टॉप एंड नेवर एवर ओवर थिंक। एंड जो भी आप मांगेंगे ऊपर वाला आपको उससे कहीं ज़्यादा देगा ही देगा।
What's a better investment? Land or apartments? Well, research suggests residential land yields better returns. Research by the REA India-owned leading full-stack digital real estate platform Housing.com found that prices of residential plots appreciated by 7% annually since 2015 across 8 major cities, while rates of apartments grew by 2% annually during this period. In 8 major cities, Delhi NCR, Mumbai, Pune, Bengaluru, Hyderabad, Chennai, Kolkata and Ahmedabad, people generally preferred to buy apartments rather than plots. The reason behind the popularity of flats are security and common amenities like power backup, car parking, club, gym, swimming pool and garden area, among others. Despite higher demands for flats in these 8 cities, the current and historical trends suggest that plots comparatively have higher returns than other residential assets. According to Ms. Ankita Sood, Head of Research at Housing.com, Makaan.com and PropTiger.com, localities such as Gurugram and the southern sisters comprising Hyderabad, Bengaluru, Chennai recorded double-digit growth in prices for residential plots, especially post-2018. She says, and I quote, "The current trends and insights suggest that land or a plot is fast emerging as a promising investment vehicle to park money in the residential real estate scenario." This is evident from the fact that in major cities of India, such as Gurugram in the north and Hyderabad, Bangalore and Chennai in the south, land prices have appreciated in the range of 13 to 21% since 2018, whereas in the case of apartments, they have grown moderately between 2 and 6%. A deep dive into the cities suggests that Hyderabad has emerged as the front runner, recording the highest price appreciation of 21% between 2018 and 21, with localities such as Shadnagar, Patancheru and Shankarpalli having recorded maximum price appreciation and demand since 2018. While Hyderabad is making strides in the south, Gurugram in the north has been picking up in terms of traction recorded for residential plots. The city registered a 15% appreciation between 2018 and 2021 in plots as compared to just 6% in apartments during the same period. The policies of the state government of Haryana and the availability of landmark in proximity to commercial areas have created a favourable scenario for consumers to buy and invest in plots in the city. Our data insights indicate that Sector 99, Sector 108 along the Dwarka Expressway, Sector 95A in New Gurugram and Sector 70A have witnessed the highest demand and price appreciation in the city. I unquote. The government of Punjab has brought down the time required to issue no-objection certificates for the purchase of properties from 21 days to 15 days. The same has been reduced to 5 working days for NRIs under the Tatkal scheme, albeit with a fee. The move has been made to prevent disputes and litigation during the purchase and sale of properties in Punjab. The ones who need NOC on short notice will be issued the same in 5 working days under the Tatkal scheme. NRIs and others in immediate need will benefit from this scheme. However, they will have to pay an extra fee for it. Meanwhile, the cabinet ministers also decided to provide login ID and password to the sub-registrars of the Revenue Department to check the originality of the NOC at the time of registration. This will help in fixing the responsibility of the officer concerned in any case of any registration done using a fake NOC. This will also help in expediting the process of registering criminal cases against fraudsters. It was also decided to issue new licenses to deed writers for the convenience of the people. Along with this, deed writers were directed to display the instructions issued by the Punjab government from time to time for the information of property sellers and buyers. Now here is our advice on how to save on capital gains tax on the sale of residential property. But before that, let us have a look at what capital gains means. Well, the capital gain is the increase in the value of an asset over a time period. The capital gain is realized by the owner at the time of the sale of the asset. Capital gain is basically the difference between the selling and purchase price of an asset. What are the factors that determine capital gains? The cost of property is an important factor that determines capital gains. It includes the money spent on its acquisition. If a property was bought for Rs 50 lakh and subsequently Rs 20 lakh was used to renovate it, the total cost of the property for tax computation purposes would be Rs 70 lakh. Similarly, under the existing Indian income tax laws, the holding period, that is, the time for which you remain the owner of a property before you sell it, plays a determining role in deciding the tax liability. If the law perceives the transaction to fall under the category of short-term capital gains, the tax liability will be higher. However, if the transaction falls long-term capital gains category, you will be charged 20.8% of the profit in taxes. The 20.8% long-term capital gain tax is applicable irrespective of your tax slab. Your tax liability will be considerably low and akin to zero if you reinvest the sales proceeds of the old property into a new one within a specific period, subject to certain terms and conditions. The tax liability is always higher for a seller who owns multiple properties. The same is not true in the case of someone who owns only one property. Well, Section 54 deals with this sort of transaction. If you sell a property within 2 years of the purchase, the gains you earn through the sale would be treated as short-term capital gains and will be taxed depending on your tax slab. The applicability of deductions offered under Section 54 will arise only when you sell the property after 2 years of purchase. This will entitle you to earn profits under long-term capital gains. In this case, while the profits will be taxed at 20.8% along with indexation benefits, Section 54 will help you get relaxations if you follow certain conditions. One of these conditions is to reinvest the capital gains from the property sale in buying or constructing up to 2 houses. In case you are reinvesting the proceeds in the 2 properties, the deduction will only be available if the capital gains on the sale of the property do not exceed Rs 2 crores. The seller must be mindful that he can claim his benefit only once in a lifetime. The law also imposes restrictions with respect to the purchase time, location, and holding period of the new property. The new property should be purchased 1 year before the sale or 2 years after the sale of the main property. In case you are building the house on your own, the construction should be completed within 3 years of the sale of the property. The relaxation in tax would be reversed if you sell the property within 3 years of its purchase. The profit earned on this sale will also be treated as short-term capital gains. The entire profit must be reinvested in the new property to claim exemption on the entire long-term capital gain amount. If this is not so, the exemption will be limited to the amount reinvested. The capital gains exemption is valid under Section 54 if you have taken a home loan to buy the new property or repay the home loan for an old one. Availing of indexation benefits can also help in saving on capital gains tax on the sale of property. For the uninitiated, indexation is the process of adjusting the purchase price of the property for inflation. The indexation benefit allows the seller to factor in the impact of inflation on the historical cost of acquisition. The long-term capital gain tax is computed by deducting the indexed cost of the house from its net sale price. On the other hand, the indexed cost of acquisition is purchase price into index in the year of sale divided by index in the year of purchase. Exemptions are also available under Section 54 EC on the purchase of specific bonds. Sellers could also claim deductions by reinvesting the money in specific bonds. Section 54 EC allows exemption of long-term capital gain on the sale of land and building if the profit is reinvested in certain specified bonds within 6 months from the date of the sale of the house. Section 54 EC specified bonds include those issued by the Railway Finance Corporation, the National Highways Authority of India, the Rural Electrification Corporation, etc. Here, the upper limit is capped at Rs 50 lakhs for this investment with a lock-in period of 5 years. More importantly, this exemption is available on the sale of residential as well as non-residential properties. The interest earned on these bonds, which is 5.25% annually, is entirely taxable. However, the maturity proceeds of the bonds are fully tax-free. Similarly, Section 54 GB exempts the profits categorized as long-term capital gain on the sale of a house or plot. If the proceeds thus earned are invested in the subscription of equity shares of eligible companies, the exemption would be available if the profit is reinvested in small or medium enterprises or in eligible startups. If you are buying computers and other such equipment for your startups with the sale proceeds of a house property, you could claim deductions under this section. Another option available to property sellers to reduce tax liability on property sales is to set off the long-term capital gains from the sale of the house against any long-term loss from the sale of other assets, including stocks and gold. These could be the losses carried forward in the last 8 years, along with the losses incurred in the year in which you are claiming the benefit. This is in short how you can save capital gains tax on the purchase of a residential property. Log on to www.housing.com for end-to-end realty solutions. That's it from us for this episode. We will be back again with a fresh episode of Keeping It Real by Housing.com with information and insights on the real estate industry. Take care and stay safe.